Hello and welcome to Crux Investor. Today we spoke with Dave Reeves. He is the CEO of Calidus Resources, ASX Gold developer, soon to be producer. We catch up with him as to what he's been doing since we last spoke to him in April. And if you want to hear our views and opinions on the conversation today, what he said, and of course what we think of the company, you can get that at cruxinvestor.com/club. You can also get company reviews on there from us, save you a bit of time. We get company reports in great detail. You also have a community of investors sharing their ideas and thoughts with each other. We do training videos and there's commentary from market experts from around the world. And if you want to go now, there's a 7-day free trial. And of course, we'd love your feedback too. So do give us a like, leave your comments. And if you want to see what we discussed, take a look in the description below. Dave, how are you doing, sir?
Very good. And yourself there, Matt?
Yeah, good. We haven't spoken since April. You've been a busy boy. The world's changed. So I thought time for an update, right?
Absolutely. It has been a busy time. We might be locked behind our borders here in Western Australia, but let's just crack on with things.
Good lad, good lad. Okay, well, look, since we last spoke, share prices doubled. It was never in any doubt, obviously. You must be delighted. Must be delighted with that reaction. Is that you or is that the market?
Yeah, look, we're very happy with their share prices, but we think it's still got a long way to go when you look at it on any metric. So, I think as we continue to tick boxes, we would expect to see that continue.
Good. Okay. Well, look, why don't we, for people new to the story, give them that 1-minute overview of the business, then we're going to get into the sort of catch up from what you've done since April.
Okay, Calidus Resources listed on the ASX, looking to develop the Warrawoona gold mine next year here in Western Australia in the Pilbara, looking at around a 90,000 ounce per annum mine, peaking up to 105,000 ounces per annum, low cost, high margin, ticking all the boxes and now starting construction as we speak.
Yeah. Okay. So when we spoke in April, you talked to me about, shortcutting various processes, just trying to move things along at pace, building the 100,000 ounce plant by, getting into production by the end of next year. Where are you with that component? Because that seemed obviously quite critical. There were permits outstanding, money to be got, and a DFS which was sort of in the making at the time. So where are you?
Yeah, so a lot has happened. It's obviously a great market for gold. So we did tap into that with a 25 million raising, I think it was around July. And that's helped us commit to a lot of things in the meantime. We got EPA approval, Environmental Protection Agency approval, ministerial sign-off. That's allowed us to commence early works. That's access road, installing the village, water, comms, etc. So that's actually happening as we speak now. That's also allowed us to apply for all our operating permits for next year. As you mentioned, we've completed the bankable study. We put that out earlier this week. Hasn't really changed a lot, as you would hopefully expect, based on how recently we updated that with a pre-feas. But what that does is the feasibility now allows us to enter into binding term sheets on financing, debt side, etc. Sometime in the coming quarter, actually this quarter, we're in October, here we go, quarter 4 for the calendar year, we'll be announcing the debt funding of that as well. And I suppose the only other big news is we have signed a binding term sheet to acquire a very high-grade satellite deposit nearby that we see bringing into the greater Warrawoona project as well and increasing ounce production per annum and cash flow. So all in all, a busy time since we last spoke.
Sounds like a long way to go, but you've achieved a lot in a short space of time. You said you would. Can we just stick on the plant bit? Okay, so I get you've raised $25 million, and that's kind of freed you up to do a lot of things. But let's talk about the debt component. I mean, what's the reaction been in the market at the moment? Is debt cheap? Is it expensive? I mean, what do those conversations look like for you?
It really depends on the debt provider. Your conventional banks are reasonably cheap, but generally take quite a bit of time and have a lot of requirements for that debt, size of hedging, etc. Your PE funds are generally more expensive, but quicker to react and less onerous in their requirements. and in between you've got various other providers. We haven't limited just to debt. We are looking at some sort of mezzanine finance, let's call it, or quasi-equity finance. We're happy to look at royalties, etc. There's a lot of money washing around in that space at the moment. So we're sort of bringing them all into the pot, and we'll see what the chef cooks up and what we think is the best outcome.
No, I get it, but that's kind of generic standard answer, right? But what does the board prefer? What do you think you're going to be able to achieve in this environment? Is where I was getting. What's the cost of the money for the ideal route for you guys? Because I know there's trade-offs, there's arbitrage, but where's your head at?
So the more debt you take on, the better for current shareholders, the less dilution, the better NPV per share. End of story. So we are trying to minimise future equity. And if you look at the cheapest debt versus the most expensive on an NPV per share basis, it's got less than 5% difference between the most expensive and least expensive on an NPV per share. So the actual interest rate of that debt, the cost of that debt, is actually irrelevant. It's the quantum of the debt that really impacts returns for current shareholders.
Yeah, but you know the quantum of the debt that you're after. So what's it going to mean for you guys going forward? This has got to be a great environment for you to go and raise money. It's got to be cheaper, surely, because your market cap's doubled, since May. The positive gold environment in Australia is great for you guys. There seems to be money washing around for gold companies. It's got to be easy, hasn't it?
Oh, look, there's a lot of interest. When you're talking to financiers and banks, it's never easy. By the time you get down into the 200 pages of fine print and try and work out exactly where they're trying to put the hooks in. There's a lot of work to do on that. We will come up with a binding term sheet this quarter. Documentation generally takes another 2 months after that.
Okay. So pretty accelerated. You must be advanced. You must know where you're heading.
We have a very good idea on where we're heading.
Oh, you're tough. You're tough. Okay, what are you've built a few of these before. You've built a few mines before. You've been involved with the build of a few mines before yourself, and as have some of the other team here. So, what are the kind of red flags for you going forward that you're particularly paying a lot of attention to make sure they don't fall over between now and actually being able to commission GNG?
Yeah, so look, fundamentally having the team in place. We've employed, one of the best general managers in Australia going around, Don Russell, recently for that. So to have him on board, certainly makes me sleep easier at night. I've worked with Don in the past. We have a lot of the senior team. We've got our mining manager, our GM manager, business services manager all in place already. So they're feet under the table. They're taking ownership of this development and moving through. So that's very important. We've announced our preferred contractors, two very well-known contractors in Australia. So that's Macmahon's in mining and GR Engineering in the plant, who built the last few gold plants in Western Australia. So tried and tested contractors, good balance sheets. So tick those boxes. Permitting we're pretty well on top of, so we don't see any issues there. And then obviously the single biggest risk on any mine is grade. We've drilled this deposit out at 12.5 by 12.5 metre spacing at surface. You can't drill it much more intensely than that for where we are. So we think we've got a very good handle on geology and grade, and we believe we are continuing to de-risk the project day by day. Yeah.
Okay. Yeah, I think it's just interesting for people to understand that. The usual thing, what keeps you awake at night sort of conversation, but specifically, those are the big long poles in the tent for you. Okay. Can we talk about the production levels, because you're aiming for 85,000 ounces per annum, right? What's the ramp up on that? Because I remember back to the conversation before. Is it a fairly short life of mine on this? You're aiming for 85,000 for the first 6 years out of 8-year life of mine, aren't you? Has that changed?
It has changed. We're up to 90,000 ounces average now, and we peak at 105,000 ounces in the 6th year of production. Mm-hmm. 7th year, we're still at 80,000. So we've increased the underground production rate in the bankable, which has increased that. On top of this will come our Blue Spec acquisition. We'll bring that out in the coming quarter, a scoping study. We see another 30 to 40,000 ounces per annum coming on top. So suddenly you're at 120 to 130,000 ounce per annum. In that time, those deposits are open. Klondike is open. We're drilling down beneath it at the moment for further underground. So this mine life will go for a lot longer, but we're not going to spend a lot more money proving out resources in 10 years' time. What we want to do is add production in the near term, add cash flow in the near term, and leverage that infrastructure we'll be putting in to maximise returns.
Because again, when we spoke, you were around sort of 1,250 Aussie, which is about 900 US in terms of your AISC. Has that evolved?
Yeah, look, there has been a tiny bit of creep. We're about 1,290 on the feasibility, just odds and sods, a bit on processing, line of wear, a bit on camp costs, flights. There's just been a bit of creep across that. But all in all, the feasibility is based on hard contracted numbers now. So we're happy with the numbers where we've got, and keeping it under 1,300 Aussie, we're very happy with.
Yeah, and under 1,000 US, just for people to try and understand. Okay, so you're working on that, and I guess you'll update us how you're getting on with it, kind of extending the life of mine that way. But you've kind of shortcutted a process in a way with regards to the acquisition of Blue Spec. Now that's a high grade project. So why? It doesn't seem to fit in with what you've got at the moment.
So as part of our project, we've got a big conventional CIL plant, free milling, produces gold bars at sort of 2 to 2.4 million tonne per annum. But on the side of it, we've got a little 100,000 tonne per annum flotation plant for these little high-grade refractory deposits, of which we've got one. And we were originally going to just fire that plant up for a year, produce a concentrate for sale from one of these 6-gram ore bodies we've got nearby, and shut it down. Blue Spec reacts very well to flotation as well. It's got stibnite in it, antimony, so we can produce an antimony gold con, very high grade. We basically get paid 100% of the gold value the antimony pays for that smelting, and we can utilise that infrastructure for another 5, 6, 7 years. So we're not displacing ore, we're just using our infrastructure to its maximum.
Okay, and what's that going to do for the bottom line?
Well, if you looked at 40,000 ounces per annum, for instance, and you used a similar all-in sustaining cost, it should be less, but let's use a similar. That's 60, 70 million Aussie a year. Let's call it 50 million US a year extra cash flow without any extra capex bar the start of the underground at Blue Spec.
But in dollar terms, what's it going to do for you, do you think? And what you're going to do with the cash that you generate from it? Because you've gone and bought that. Is there other land acquisition that you've got in mind? Is it going to pay off your debt quicker? I mean, how do you? Why have you made the acquisition basically?
Well, we made the acquisition because it's hugely value accretive. End of story. Increase ounce production, increase cash flow. It pays for itself in a few months once it's in production. So that's why we've done it. What we do with that cash, well, that seems quite a way away. We've got to build it, make it, and then we can determine. But, certainly as a large shareholder, I'd be pretty excited about dividends myself.
But the market hasn't reacted. It doesn't seem to have given you any credit for it. You think it's better than the market does. Why is that?
I think we will be putting out an updated resource and scoping study in the coming quarter. And I think once those metrics are out, let's have this conversation again and see what the market thinks. Good.
I hope they do. What about other land packages? Are there more things around there which you think you could take advantage of?
Oh, absolutely. Once we've got a mill there, we become the dominant player in the East Pilbara. So fantastic position to be in. We can leverage off it. In the short term, I think we've got enough on our hands. We've got lots of exploration to do on our current tenement package. If an opportunistic acquisition comes up, we'll always look at it. But I think our focus really now is building, producing gold, producing money, showing what all these things bring together, and at the same time doing exploration to show extra mine life.
Okay, so if I look at share price, obviously double since we spoke in April. Great news. I mean, shot up. But you talk about potential for re-rate. You don't think it's fully valued yet. So what are the things that you're going to have to deliver to get new people looking at this interested? Because right now I'm thinking, oh, crikey, I've missed the boat. These guys have These guys have seen a huge jump in their value. I better look elsewhere. Why shouldn't they?
On any metric, we are undervalued. Have a look at the analyst reports on our website. On an EV per ounce, EV per free cash flow versus any producer. As we take that step into production, there are multiples still to be had on our share price. And I think once we show that funding in particular in the coming quarter, I think that's one of the key items to release that handbrake.
Right. Okay. I think I always take analyst coverage with a pinch of salt because you guys are paying them to write nice things about you. That's the way it works, right? So
we don't pay them. We don't pay them for the coverage down here. No, not allowed to.
Not allowed to. But they have a job to do. They sell you to their clients. So genuinely, if you look, like I say, I want to kind of I had a real conversation with you last time. You're an honest guy. With regards to what's coming up over the next 6 months, there's a lot to deliver. I know you've achieved a lot in the last few months, but there's a lot to deliver. What is genuinely the moment that people should be looking for? Is it the first shovel in the ground with regards to the plant? Because you talk about construction's underway, but what are the big moments that really make a difference when you're building a mine?
Look, we've looked at quite a few other companies that have been going through development recently and trying to work out what was the catalyst that released the handbrake for them. And they're never the same, and they tend to be a slow release as you move towards production. But certainly getting the funding in place is important. Finalising the permits is important. And just building is important. As you get closer and closer to gold, the market becomes more and more excited. So it really is just a gentle progression from here, I think.
Right. And do you think, we talked last time about being a single asset, and I know you made this kind of small acquisition of Blue Spec. Do you think you're going to need to do more to kind of get, move up the food chain, as it were?
So, a stat we quite often talk about is a single asset company, which even with Blue Spec, we're still a single asset. It's really one plant. Trades at generally multiples of around 3 times EBITDA. Market cap EBITDA is threefold. Multiple assets trade at around 5 times. So you can get a lot more value by building into a multi-asset company. And why wouldn't you do that? Don't become emotionally attached to these things. So we'll certainly look at that, but I think we need to add value by getting into production. And once you're in production, it's a lot easier to look at those scenarios.
Okay. Alkane, I asked you if Alkane were going to invest in the next round, and did they?
Yes, they followed their money. They said they would like to participate with more, but we're very happy with their current holding and their current relationship. So, they followed their rights and remain a supportive shareholder. Yeah,
because they've got a fair chunk of change there. I mean, are they not part of the solution in terms of growth? Or, are you genuinely saying, we've got to get this thing into production? That's all we care about at the moment. But I keep coming back to this single asset thing. The re-rate thing is important. How important is Alkane? Will they help or hinder you?
Oh, look, they've only been helpful to date, and I don't see why that would not continue. They've stated since day one that they see this as a very good investment by helping us into production. They'll make a lot of money now. Whether they decide to then sell out and use that money on their own projects, whether we have other discussions about putting operations together, I don't think Nick's shy either about saying it makes sense at some point. But certainly for our shareholders, I think the most sensible thing for us is to get into production, get that value into our share price, and then have sensible discussions with Alkane and others.
Right. And the reason I'm kind of pushing on this one is because, that's potentially a massive overhang. If they've got other problems themselves or other focuses themselves elsewhere, and they do decide to kind of cash in without involving you as part of that process, it's a problem, right? So I just wanted to understand the nature of the relationship that you have. Are you working on things together going forward, or are they just a kind of passive passenger?
No, look, we're separate companies, separate boards. They do their thing, we do ours. We keep chatting to each other, but that's about it. But as I say, they've been incredibly supportive to date, and we don't see that changing going forward. Okay.
Dave, thanks for that update. Fantastic few months. Well done. You did what you said you were going to do, which we always like to see. Market has reacted. Let's see how they react when you start delivering some of these other components. Appreciate your time.
Thanks for your time. Watch this space. Next 3 months is going to be very exciting. Should be a happy Christmas for all Calidus shareholders, I hope.